Ask Scruff. Now, this one's for Abarusha. I think that's how you pronounce it. If I butchered the name, I do apologise. But you'll kind of see it in a second. There it is there. Looks like Albarusha. Try again. Hope you had a we did have a lovely Easter. I'm still on it. I'm going off to have some lunch with friends today. Just internet changeover, so why not? And while I'm messing around, I thought I'd just use the camera to fill some space in and catch up with questions. So this one's a cracker. So you've been looking at the river, etc., and you've been back testing, forward testing it on a prop. Excellent. The only prop that I recommend are the fivers, simply because I trust them and I've never really had an issue with them in the last few years. So that's good. There's just one thing that I haven't fully figured out, which is the drawdown limits on prop firms are quite strict. They are. Now that raises a question inside a question. Oh, but here's the best question. She brought me coffee.
I have brought you coffee.
Because we all know Scruffy likes his coffee. But the question is, what do you want?
Nothing. I made coffee.
Nothing.
Yeah. I'll think of something more.
Well, I'm pretty sure you will. Nearly got out of it unscathed. Right. The question inside a question is about the drawdown. Now, when it comes to prop, most people think, oh, I've got a £100,000 account. This is amazing. I'm managing 100k. You're not. If you've got a 4% drawdown, that means you're managing 4k. Trade to the drawdown, not the account size. If you trade into the account size, that's ludicrous, and it's just bragging rights by dickheads, to be honest. They won't tell you this, because you lose the drawdown, you lose the account. Anyway, got any questions on that, just drop me a line and I'll help you best I can. Anyway, even without madness, my setups, I'm already finding that it required the investment to trade too high in relation to account size. Ideally, I aim minimum size, 10% portions per level. Okay. If you've gone through the way of the Scruff guys, that terminology might make sense to you. The river is a trend-based strategy. However, you don't use madness in it in the traditional sense. Now, I'll get onto that in just a second. So my question would be this. Would you create a minimal basket of instruments that fit within your risk and scaling approach, or do you simply use smaller position sizes? Okay. All right. So let me kind of define a couple of elements here. If you've got a prop firm and you know what the drawdown is, you know what the account size is. Now, I'm just going to use a basic example here. Now, I'm going to assume that you've got £1,000 worth of drawdown. Okay. That's not unrealistic and it's quite common across the industry. That means your maximum position size would be £1. £1. All right. You cannot have any more than £1 in the market. Now, when it comes to swing trading, which is what the river setup is, it's based on a two-stage ignition. It has momentum and a directional cross, and then you ride it out best you can. And then there's a hybrid version of it where you manage it on a day trade. Now, both of them are going to run for roughly about 3 days plus. Okay, day to get in, day to take your profit, and a day to get out, sort of thing. Now, when you swing trading, madness shouldn't really be used in the sense that you're thinking about. My rules are 1, 2, 3 trade, 4 get out where I got in, and 5 just get out. With a swing trade, what I want to do is actually load up. So I'm capitalizing on all 5 positions coming against me. Okay, because the market will oscillate around. So I'll have a parameter where I'm going to put the stop, and then I'll put the positions in so that I can get 5 of them running at once. And then that gets me a big chunk of money. Okay. Now from here, this is where the management side takes over. If you set your levels incorrectly, now I do the same levels and it doesn't matter whether I'm day trading, scalping, swing, position trade, the levels are identical because they come from high time frames. I will carve off my total profit so much percent till I'm left with only 10% left. So if all 5 positions are running, and let's just say I've got 10 quid's worth of profit and it comes to the first target, I'll take £1 out, but I will take off from the first position working to the last one. So it's first in, first out. And that way, if it does come against me, it's not putting the first position into a negative. All right. So that's the first part of the way I manage it. I'll go through this in the live Zoom calls for you, kid. But I also wouldn't be putting the maximum amount into the market either. Because with a swing trade, by definition, it's going to have a lower hit rate because you're holding the trades for multiple days, even weeks. Eventually, you're going to get whipsawed and it's going to catch you in and out. When you're day trading, you can have a win rate well in excess of 75, 80% because you're in and out of the markets relatively quick. That drops down significantly to about 60, 65% for a swing trade. Now, they're just rough figures, by the way. So if I know I've got a pretty piss poor win rate, I'd be stupid to put all the money in. So even though I can put £1 into the market, I would only actually go in at 50p, half of where I would normally be. And then I would break that half up. So if I was taking 5 positions, that would be 10p on each one. And that's how I would do it. And when it comes to the instruments, the beauty with sort of the way the river's set up, doesn't matter what you're looking at. So you can look at all 28 pairs, the indices, few commodities, sort of the precious metals, that sort of thing. And you can have a huge basket. And because you're only looking for a sort of 2 elements, you can quickly gauge it on the screen and see if the setup's there. And because it's on daily charts, you've got all day to work it out. So time's on your side. You can easily look at a basket. You've seen mine. I have them split up into FX majors, FX minors, commodities, indices. And I just flick on the screen and I can quickly see it in a heartbeat. It takes about 10 minutes. And if it's there, then I'll drill into it, see if I need to do anything. And then once it's triggered, I only run 1 live at a time. And when it gets to risk-free, then I'll look to put a secondary in. So for all I'm looking at multiple products, once I've committed to one, I can't take another one on until that one is safe, and that protects the account as well. So I hope that helps you. Catch you soon.